Hey everybody, welcome back to another episode of Ryan Makes Sense. Today we're going to be doing a re-review of a company that we looked at not too long ago. The overall consensus was that the stock looked good, but due to the long-term formation, it was actually going to be heading lower. Typically, there is some type of story with the chart, and that narrative soon comes later. Sometimes the narrative is already baked in, and then we wait for the development of the chart. So in this instance, we are actually going to be reviewing a stock that had a great pattern on the monthly that was a clear bear flag, which is a bearish pattern, which meant the stock was going to go lower, although the stock looked fine. Come to find out, they had performed a merger. They had acquired a new company. That's essentially all I know at the high level. I don't know if sales have gone down, if debt's gone up, etc. So we're going to do a pretty in-depth look at ticker symbol ACDC, and that is ProFrac Holdings, and just see what's going on behind the curtains, see what company they purchased. Was it a company that's going to add value, or is it a company that's going to add value in the future? Just a lot of variables. Let's go ahead and jump on in. Oh, and consider hitting the subscribe button, or the like, or the dislike. Maybe leave a comment. All right, guys, we are looking at ticker symbol ACDC. This was the main chart that it landed on, which is the daily chart. Again, I look at the bigger chart, which is the monthly. And this was my bear flag analysis. Again, it's kind of all choppy, but essentially we have our flagpole here, and then we have our flag. And then now we can see it's hit new lows. And just looking here, it actually looks like it's put in a triple bottom. You can see this candle has hit a low. This was a November's candle. December's candle hit a low of, let's see, we're going to call this 762. And then this candle, which is January 2024, it also hit a low of 762. So a triple bottom here does not sound out of the question, which would mean the stock could likely move upward. The only thing that would cause that to not move upward is negative sentiment, stocks declining, insider selling, business going down the pipe. You know, there's a lot of things. So what I first want to do is I want to see what institutions and hedge funds are doing, because they are the big money, and I want to see what big money is doing. All right, so do I have the right company? Yes, I do. Let's see, ProFrac Holding. Let's see if we can find something. I have one more site we can go to as well. Oh, okay. No data. Looks like insiders purchase. Hello. Hello. Okay, that's quite a bit of buying. THRC Holdings. Let's go all the way back to their first buyback in May. They purchased 3.7 million, 2.4 million, 920,000, 4.5 mil, 2.7 mil, 6 mil. It goes on, it goes on, it goes on. Very, very cool. So that's not, I mean, that's an institution, but let's try and see if we can find institutional ownership here. Okay, I froze up there a little bit. I'm working with this new camera. Okay, so it looks like institutions own 11.8%. That's the new data. Old data shows 9.9%. So it actually looks like institutions are buying, which is crazy. So that's a sign, honestly. And if we go back here, I'm looking for. Yep. Okay. So we have identified the correct company because we can see the THRC holdings here. So, yeah. Looking down a little bit more, we can see some people are. We saw 2 cells, trimming. This is possibly shorting. Yep, this is short. We can see short here. Trim, adding. New position, or I don't know what this is. Trimming? Trimming, new position or added position. Trim, added, BlackRock added. So BlackRock added in their small mid-cap index fund, and they sold some in their total US market fund. Goldman Sachs has a couple good positions here in different portfolios, which is crazy. So, I mean, institutions like this one. It's kind of what I'm gathering. Looking here, it looks like the PE is 8.59, which means this is undervalued. Forward PE is also showing that it's undervalued in the future based on today's standings. And this does not lie right here, and also this does not lie right here. Can you guys see? Yeah. So let's see what their what's been going on. Okay, so I've opened a few articles. Let's just look into the first one. Okay, so they had some headwinds, but they reduced its net debt considerably. The decline was attributed to a lower average fleet count. Not a good quarter. Not a good quarter. Okay. So they have debt of 1 billion, 55 million. Let's see. We should see a decrease from here. No, they increased it. So they have 1 billion in debt. Okay, so out of this article, I got that they have 1 billion in debt. Decent revenues. If I read that correctly. No, okay. So, sorry, my camera's being laggy. Where was it? Okay. So the CEO highlighted the company's focus on securing dedicated agreements for the 2024 and the potential of the propant production segment, which is expected to lower mining costs per ton and increase asset utilization. Okay, nothing crazy there. Here's another article we're looking at right now. Can you guys see it? Yeah. So the actual CEO family has invested 50 million at a conversion of $20. Whoa. Okay. So it looks like they might dilute. Oh, wait. Issuance of a grant, $50 million of perpetual equities. No specific timeline has been established. Okay. So it sounds like they might do an offering at some point. Okay. Interesting. I'm gonna keep going through these articles until I can find a red flag. Okay. Okay. Here's something to look out for. Lastly, we believe the currently proposed regulation by the Department of Interior and related to the DSL would have a minimal impact on our propent production. This is because we believe that our West Texas assets are well outside of the high-risk habitat zones. Oof, that's a risk. That's a risk to call out. A lot of Wilkes on the board. Did you notice that? Lad Wilkes. Matthew Wilkes. Is that it? Okay, maybe not. Reduce the debt by 86 million. What is this article from? Oh my God, this is back from October. Jeez Louise. Actually, August. It's back from August. I think that's a little too old, honestly. Okay, so let's. I want to look at their acquisition. So let me go ahead and do this really quick. So I did some digging and I found that ProFrac did purchase US Well Services. That was ticker symbol USWS. You can look at the details here, but essentially, where is it? ProFrac, excuse me, purchased the stock worth $270 million and using cash to retire $170 million of the U.S. well service debt, leaving approximately $35 million of various forms of equipment related financing outstanding. So that was back in November 2022. So what we can now do is look here. I was on the ProFrac website. I'm on their balance sheet, and this is data as of September 30th. I know that is about October, November, December. Yeah, about 4 months from, today. But it's also almost a year since they purchased ticker symbol USWS, which was US Well Service. Sorry, I should have said that. So let's just do a quick comparison. So they had $10 million less in cash. Inventories is up slightly. We want to find total assets. Total assets is down. Total assets, sorry, that was total current. we want to look at total assets. So total assets is at 3.2 billion, up from 2.9 billion. So that's a $300 million asset increase. And we're going to go to total liabilities, 1.8 billion in total. Yep, total liabilities. That's up, not quite 300 million, but close. So it looks like there was an offset once they purchased that company. Let's go down. That's all we have. So I want to see if they have, yes, here we go. We can look at the income statement. Okay, so we want to see 9 months ended. So revenue is up 2.1 billion compared to 1.6 billion. That's for about $500 million increase. That's huge. Is that, I wonder, I just think I might be able to do that here. Let's see. Yeah, 2.9 billion compared to, so that's about, okay, so I could be reading the FinViz site and it would still be accurate. So let's just read it here. So 2.9 bill, so gross profit is up, which is good, but gross margin, let's see what that is. Gross margin is 22%, which is not bad. Okay. Net income is down. That could be going in a scary direction. Income right now is at 26 million. Okay, so based off the transaction from last November to today, they did have some headwinds. The Wilkes family has put in over $50 million of their own cash. I do expect they want to see a return on that. And yeah, that's right. So it is Matt Wilkes is the chairman and president, where my head is. Here we go. The CEO is Jonathan Wilkes, and that's all I can see right here. Okay, so let's look at their balance sheet. 35, this is back in 2022. Let's go quarterly. Okay, as of September, 25 million in cash, which lines up with what we literally were just looking at. Balance sheet. Pretty sure it was 25 mil cash. Yep, 25 mil cash right here. Okay. So let's just rely on FinViz at this point. So cash is fine. Total assets, 3.2 billion. Yep. Slightly down from last quarter. We're looking at quarters here. So if we look at last September, 3.2 compared to 1.9, again, that's about a 300 million increase, like I said. Total liabilities, 1.9 bill. Yep. Okay, total debt was 1.2. That's quite a bit, actually. 1.2 billion. Then it was 1.16 billion. Now it's 1.05 billion. So they are making progress. I do like that they are continuing to hammer this debt. I really like this. I actually, this triple bottom is pretty amazing. So I'm really interested. I want to do the my calculation that I typically do. So oh, look what I just noticed. It's being shorted to the ground. Why? That's crazy. So what that means is 6 million shares are being borrowed because people think the stock price is going to continue to go down. Wow. So that leaves 12 million shares for the public. So what could happen, and this is insane, is a short squeeze. Basically, you get someone in here with big money, purchase, 50, 100, $200 million worth of shares. This stock is going to go through the roof because the supply is lower because people are borrowing. And so they're going to have to they're going to deplete the supply And the people who are borrowing their shorts are going to have to get margin called because the stock price is going up, and they're going to have to sell their shares so people can buy it. It's kind of like a GameStop thing going on. So that's just very oversimplification. Let's go back to my calculation here. So I take the $1,280,000,000 market cap. I add the income, which is 26,900,000. And I add the sales, which is 2,930,000,000. All right. And I now go down to the bottom and I'm going to add the cash and remove the debt. Okay. Total cash, again, 25 million currently, so plus 25,100,000. Total debt was 1,057,100,000. Yep. All right. And we're going to take this, can you guys see the calculator? Yep. Divided by 18. Okay, we're going to do two calculations here. So we're going to divide it by, this is going to be the more conservative price target. So divided by 54 million. $38 is the low end on that. Let me just write this down. I don't believe that. That's crazy. 38. And if we take this right here and divide this by 17. Well, with the shares shorted, let's do that. Divided by, it's going to be about 12 million. $171. So if you're asking how do I do this crazy made up math, I worked at a micro cap company. It was a startup, and now it was a unicorn billion-dollar company in 2021. But we had stock finance experts come in, and every $100 million in sales equated to a $1 share price. So with the sales being 2.9 billion, that's $29.30 in share price. And the reason I include the market cap, which will be $12.80, because if you do the 1.2 billion divided by 100 million, that's going to give you $12.80. So $30 flat seems like very reasonable stock price here. And honestly, it's been to 27 before. So with that said, I am going to put my money where my mouth is. And I'm going to look into buying this one next week in my Robinhood account and potentially my M1 account. I need to check. The reason why I feel comfortable is because they're paying off their debt. The CEO is heavily invested, to putting his own money where his mouth is. We have this crazy company, THRC Holdings, that has over 70 million shares. It says they have 72 million shares right down here. And they just continue to buy. They haven't purchased in a couple months. So, I mean, down at these prices, $8, where could I go wrong? You know? And why are all these people shorting? It makes sense if this is old data. So this data here that I'm circling is typically old data. So it makes sense that this is old data. Let's just do this. It'll take an extra minute. Let's see what the current short interest is on this stock. Okay, let's see. Yes. Okay, so we want to find short interest. $4.1 million right here. Can you guys see that? Yes. Okay, so This makes my case even better. The people who were shorting the stock have exited. At least 2 million. No, let me get it right. So it was 6.2 million shares shorted. Now it's down to 4.1. 2.17 million shares have been flipped and put back into circulation, which means people have stopped shorting this, meaning they may have went long, meaning that, okay, they got this to a triple bottom. Now let's buy. So I feel good about that. Yeah, I mean, I don't know where else I could. They're profitable. The quick ratio kind of scares me a little bit, but given how much cash and assets they have, I feel fine. I mean, look at this PE right here. You guys can see, yep. It's being recommended as 1.86, with 1 being the strongest and 5 being the worst. I mean, we have insiders purchasing, we have institutions purchasing. I just think this stock is just being manipulated, honestly. People are taking advantage. And look at this. Do you see the shares outstanding? It went from 140 million down to 54 million. That shows that there is heavy demand for the shares. It would be horrible if this was reverse and it was going up in this way. That would mean dilution, but it's going down this way, meaning there is good interest. I am personally going to buy this one. I might buy it. And I made this video January 7th because I have a backlog of videos coming out. And this is going to be coming out January 22nd. So you'll see if I purchase because I post it to my YouTube community page. So very exciting. Cool. I am glad that we came back around on this one because it now if we're looking at the patterns, you guys can see, it kind of looks like a potential Head and Shoulders inverse. So shoulder here, head here, coming back up around, and then maybe another dip for the right shoulder. But that's, again, the scariest thing you could ever do is try and predict a chart. So yeah, with that said, I like this triple bottom. I like the sales. I like the debt situation. They're tackling the debt. I like that the CEO, the family, has put 50 million of their own cash in. I like institutions buying. I like insiders buying. I like that the shorts are giving up. I do like that gross margins are 22%. They're profitable, paying their debt off. Yeah, I mean, it's hard to find something to bash this one about. If I was trying to be contrarian bashing, I would target their debt and maybe, let's go down. Maybe the lack of buying from the insiders, but I mean, they purchased quite a bit. The CEO purchased $151,000 worth, and the executive chairman purchased $192,000 worth, on top of the 50 mil they put into the business. So this is crazy. We have a CCO secretary selling 23,000 of the 150, so it would have been 177. So selling some, and then this person selling about a quarter of their shares. And then we also don't see the people who own this company, the family members. They're not swing trading the stock, which is another plus. So a lot of pluses. And then just to add again, more pluses for myself. Gross profit is up on an annual basis. Quarterly basis, it just fluctuates. So if we go back here, trailing 12 months, 1 billion in profit. That's awesome. Compared to 2022, they were at 986 million in profit. So that's 73 million plus 14. It's about 100 and something million increase, which is good. The only, if I was being a negative Nancy, contrarian, bearish here, it looks like they paid more. They paid more to get less compared to 2022. 2022, they paid 1.4 billion to make 986, and this trailing 12 months, they paid 1.8 billion for 1 billion. So they paid about 400 million more just to get 100 million. So that's my only potential riff here. But again, headwinds. So I do like this one. I will post to my YouTube community if I do purchase. And yeah, this video is coming out soon. If you guys made it this far, consider hitting the subscribe, like, dislike, leave a comment. Hope you're doing well. Take care of yourself.